A few days ago, one of the world's most feared investors just targeted Australia's biggest gold miner. Paul Singer's Elliott Management took a huge position, over 1 billion Australian dollars, roughly 700 million US dollar, becoming one of Northern Star's biggest shareholder alongside Blackstone. Northern Star's share price is down more than 40% from its highs, even as gold trades near record levels. While every other gold miner is going up, Northern Star is the only one left behind. They promised more gold and lower costs. Well, they delivered the opposite. 7 times in 4 years. Costs that quietly doubled, and 2 weeks ago the CEO announced he's stepping down. But Elliott Management is here, and they're not playing around. They want to make money. In their brutal 39-page presentation, they say Northern Star could be worth at least 55% more than it trades today, and potentially much more if a takeover happens. So is Elliott seeing something that the market missed? And can investors like you and me still make money here? Paul Singer's Elliott Management just acquired 4% of Northern Star, putting them among the top 5 shareholders alongside BlackRock. That's not a small bet, that's a statement. This specific campaign is being led out of Elliott's London office, run by Paul Singer's son. So who is Elliott Management? They have 80 billion under management since 1977, 40% average annual returns, and they have only lost money twice in nearly 50 years. The playbook is very aggressive. Buyback, force change, new CEO, sell assets, break up the company, or sell it entirely. And they all want to do this usually within 12 to 18 months. They're also not new to gold either. They own a big stake in Triple Flag and gets paid in actual gold. So they see the real costs and the numbers from inside. They already know how Australian boards work. They previously pushed BHP to restructure. So when they say Northern Star trades at a 36% discount to peers, it carries weight. Elliott typically tries to work with boards behind closed doors first. Whether that happened or not, they have now gone fully public. Shareholders, potential buyers, and journalists all know exactly what Elliott thinks is wrong. The board can no longer ignore it quietly. The clock is running. So what is the problem? The first chart tells the story clearly. The blue line is the Northern Star's peers. The other big gold miners up 192% since late 2024. Then the yellow line is the SPDR Gold Shares ETF, the most widely followed fund that tracks the gold price, up 70%. And the red line is Northern Star, up just 24%. While everyone else in gold was winning, Northern Star was barely moving up. And that is just since late 2024. And we all have seen what the gold per ounce has done in the same period. Zoom out to 3 years and Northern Star has fallen behind its peers by 203% points. Now look at these two valuation charts and you can see exactly what the underperformance has done to the stock. The first one shows how much investors are willing to pay for every dollar of gold in the ground. Every major miner trades at or above value. Northern Star, the yellow bar on the left, at just 0.69, dead last by wide margin. The second chart shows the same story from a different angle. How much investors pay relatively to earnings. Northern Star at 3.4 times earnings, peer average is 5.5 times. Also dead last again. Two different ways to measure value. Same results both times. And that gap has one cause. Poor execution has destroyed investors' trust. To understand what went wrong, we need to go back a few years. Northern Star was built by one man, Bill Beament on the left. He started with a tiny company and turned into Australia's biggest gold miner. During his time, the stock went up around 13,500%. At the same time, a man named Rayleigh Finlayson on the right was running a separate gold company called Saracen, operating mines in the same region of Western Australia. Under his watch, the company turned around 1,300% to shareholders. Both men were miners at heart. They knew how to run operations, they hit their targets, they built teams that delivered results year after year. Then in 2021, everything changed. Northern Star and Saracen merged into one company. Overnight, the business doubled in size, and both Beament and Finlayson walked out the door. Stuart Tonkin took over as the new CEO. He inherited a company that had just doubled in size, with the founders gone and a much bigger operation to run. And Northern Star did not slow down. They kept on growing. They bought the grey mining, adding a massive new gold project called Himai that would not produce a single ounce until 2030. They launched a huge mill expansion at KCGM. They were now running 6 mines spread across Western Australia and Alaska. 6 mines, a $1 billion construction project, a massive new acquisition, all at the same time, all without the people who built the company. So the company had grown faster than its ability to run itself. And that is when the cracks started showing. So problem 1, which should be the easy part, moving rock, keeping the mill running, planning which rock to dig next, the absolute basics of running a gold mine. At KCGM, their most important mine, the mill kept failing to process enough rock that contains gold. A crusher broke down and stopped operations completely. And even when it was running again, it was processing far less gold than planned. With the new mill still under construction, they had nothing to fall back on. Because of this, in January and February 2026, Northern Star dug out only 220,000 ounces of gold, less than half of what they needed to stay on track for this year. And it was not just KCGM. At Jundee, another major gold mine, production of gold was so slow they had to stop and investigate what was going wrong. When the March update hit the market, the share price dropped 50% in a single day. Problem 2. Every company misses a goal occasionally. That's normal. But Northern Star missed their own goals for 7 times in 4 years. And this year, 2026, was the worst year. In just the first 3 months, they lowered their production goals for 4 separate times. January, crusher failure at KCGM, first lowering. February, costs going up, spending increasing, 2 more lowerings on back-to-back days. And in March, because of the investigation, was the 4th lowering. And the share price kept on dropping. Each time management said it was temporary, each time it happened again. And at some point, analysts stopped believing them. JP Morgan even said directly, the market is not willing to price Northern Star at full value until delivery improves. Citigroup was even more blunt. They said the last downgrade for NST, that is what we thought in January. When the banks that cover you start making jokes about your goals, you have lost your market's trust completely. Problem 3. Let me show you 2 separate problems here, because they are very different things. So when we look at the right side of the chart, back in 2022, it cost Northern Star around 1,500 Australian dollar to mine every single ounce of gold. Today, that number jumped to 2,700 Australian dollar per ounce. Every single year, higher than the year before. They promised to bring those daily costs down. but instead they went up every single year. So when you look on the second chart, in 2023, management told investors the new KCGM mill would cost 1.5 billion Australian dollars to build. Clear number, clear plan, right? The actual bill is now at 2.84 billion Australian dollars, nearly double. And that bar on the chart still has a question mark on top. Nobody knows the final number yet. So where did all that extra money go? Well, we can see 250 million Australian dollar in mill overruns, 565 million to prepare the underground mines to feed the new mill, 525 million digging new tunnels to reach the gold. None of this was in the original budget. None of it was explained to the investors upfront. When the analyst asked why, on the earnings call, the CFO said these extra costs of around 500 million Australian dollars per year would likely to continue for a few more years. Investors who were told a 1.5 billion investment are now looking at nearly double with no end in sight. So then we have problem number 4. When we look at the chart, nobody stands out immediately. Every major bank that covers Northern Star has been lowering how much gold they think the company will produce. Not just for this year, 4 years into the future. Across the whole company, they have lowered their numbers by 9% in just a few months. Less gold, less money, lower share price, and that drop starts exactly when Northern Star began missing its own goals in February this year. Here's why this matters. When banks lower their numbers, big investors who own shares start asking themselves, why am I still holding this? They come here for a well-run gold company. That is not what they got. And one by one, they move their money into other gold miners that actually are delivering. That moves the share price down even further, which makes it even harder for Northern Star to attract new investors, do deals, or bring in top talent. It becomes a downward spiral. And Northern Star is making it worse by staying silent. No clear plan for the future, no detailed mine plans, no proper explanation behind the billion-dollar decisions. Big investors hate uncertainty more than they hate bad news. Bad news they can plan for. Uncertainty they cannot. So the mines are fine, but the trust is gone. And without trust, even greater mines start trading at a discount. So then we have the fifth problem. After the merger, a long list of senior people walked out the door. The chief operation officer, the chief financial officer, the chief development officer, senior geologists, mine managers. Many went to other mining companies. The knowledge disappeared from the company. And now the CEO himself is also on the way out. And no permanent replacement in sight. So even though they have great minds, nobody left who knows how to run them. Northern Star is trading on the Australian Stock Exchange, ticker NST. Besides that, it's also trading in the US, over the counter, and ticker name is NESRF. So this is the biggest Australian gold miner. They have the capacity to dig up around 1.5 million ounces of gold every year. And all of it from the two safest places in the world, Western Australia and Alaska. Their most important mine is KCGM in Calgary, West Australia. It has been producing gold for over 120 years. A brand new mill is coming online later this year, designed to nearly double the amount of rock that it can process. If the mines can deliver enough rock to feed it, production from KCGM alone could eventually reach 900,000 ounces per year by 2029. They also own a massive new gold project starting production in 2030 that will add another 530,000 ounces per year. And just this week, Northern Star published their latest reserves numbers, which is 28.4 million ounces of full proven gold in the ground, and a further 88.9 million ounces of total estimated resources across all their mines. The proven reserve base alone is enough to keep mining from nearly 90 years at the current production. So great mines, great location, everybody agrees on that, even Elliott. The problem is the people running them. So what is Northern Star actually worth? Full disclosure, I do not currently own shares in Northern Star. The video is for informational purpose only, and of course not financial advice. Always do your own research before making any investment decision. So Northern Star has 24 million ounces of fully proven gold in the ground, enough to keep the mining for 16 years at the current production. That was the number Elliott used in their presentation on June 2nd. So whatever money is left after those costs, that is the true value of the company. Elliott uses the share price of 18 Australian dollar and 81 cents in their presentation. At the price, investors are only paying 69 cents for every dollar of value in the ground. And this is interesting because the average major gold miner trades at around $1.08, so higher for every dollar. Northern Star is the cheapest of every single major peer by a wide margin. To simply reach the average, so not to be the best, just the average, the share price would need to rise from $18.81 to roughly $29. That's a 55% upside. This is happening while the gold prices are near all-time highs. Almost every other major miner is trading at full value or above. So this company is left behind. And the gap between $18 and $29, that's of course what Elliott is here to close. So what is Elliott demanding right now? First, hire an independent bank and explore all options, including a full sale of the company. Elliott believes there would be a significant interest from buyers. Second, add new directors to the board with real gold mining experience, people who can support the CEO search and bring immediately credibility. Third, and this is important, do both at the same time. The sales process and the turnaround plan are not two separate choices. Elliott wants both running in parallel right now. So no waiting, no choosing the one over the other. And Elliott has made it clear that they want to work directly with the board to make this happen. They want to be a part of the solution. So here's my personal take. If I felt that I missed the gold rally last year, then this is my second chance. And that's so beautiful. This gold company is sitting on a big discount while everything else trades at full price. For me, that means getting gold for less than it's worth. And especially when Elliott can close the gap. Then I get my return on investment. And what excites me the most is the takeover part. That means a clean exit, strong return, and no more watching quarterly results and worrying about the gold price, because that's a real risk here, right? It all depends on gold price. Can you imagine when the gold price goes below their cost? That would be terrible. And if I still want to hold gold, I would just buy physical gold after selling the stocks when they reach their value. And this is always so beautiful, and I think this is always so interesting. Every time you think you miss something in the market and everything is already gone, prices are up, gold price up, and then there's this opportunity, a small window to get a great company trading at a cheap price with a billionaire pushing to close the gap. I will keep you updated as the situation evolves. And if this video was helpful, just let me know.